Markets near all-time highs. Many people looking at the account balances and wanting to retire early. This is Bill. Seems like an indicator that a market correction is coming. What say you? Bill, there's no way to predict the future, is what I say.
You know, you could
Agree or disagree?
yeah, I agree. You could predict a market correction any year over the last 20 years.
Sure.
And sometimes it happens, sometimes it doesn't. It's hard. It always seems clear after the fact, but until you get there, it's never really that clear. You could have made great arguments why there was going to be a market correction in 2013, 2015, 2017, and so on, and yet there wasn't. So yeah, don't invest thinking there's going to be correction. Invest in such a way that you are going to get the rate of return you need to cover your goals with the most conservative portfolio possible to get the rate of return you need to hit your goals. That's what I would say.
That was
That
was
was
a lot.
that was amazing.
that was a ton. That was good. Look at Aaron. Fell asleep back there.
Are you kidding? He's writing it all down.
Bill, if you want to be prepared for when the bull turns into a bear, our bear market survival guide will show you signs that a bear market is coming, how recessions factor in, and investing strategies to beat the bear. Download it from the link in the description.
I don't know. This is Travis. Right. I don't know if a 2% withdrawal rate isn't good enough. What are we all doing here? Financial planning itself is kind of useless if we're thinking about a catastrophe. Or he said something else that I can't really.
Catastrophizing.
Yeah, thank you. Of course, there is a risk of a black swan event that could derail anyone's retirement, even if they retire at 70. Point taken, but it's not exclusively to early retirees. Also, the idea that the only thing you can do with your time is trade it for money, even when you already have enough, I feel that it's just a lack of imagination. Totally agree, Travis. Thank you.
Good point.
All right, we got southduck.
Southduck. Okay.
Southduck, not a north duck.
Yeah. Not east or west.
All
South.
right. So he's telling us, he goes, tell the 42-year-old to clock out and go home. He's good. The guy that is worried in calculating a 0% return. From him, he could just use an annuity to squash those fears. I wouldn't do it, but I wouldn't keep working in his case. All right, Southduck, retire if you got the cash that this 42-year-old did. Bill, I think Joe's bias has crept in here, and not in a good way.
Not in a good way.
Not in a good way, Al.
Okay.
I don't think bias is ever good if it creeps anywhere. That's just,
Usually it's not.
I'm just saying.
Yeah.
Al is better. Al's always better. You're very pragmatic here. The math works. The kids are only young once. Live a little. Did I mention the math works? If there are financial issues, then he can get some type of income. All right.
Yeah, makes sense.
Yeah, maybe I was
You were-
being ultra conservative that day.
Maybe so.
I'm just saying.
You probably had
If you're
some.
42 years old, you stop working.
Yeah, it's pretty early.
It's pretty early. You live off, I don't know. But the math works, but sometimes life gets in the way. We got Edgar. He writes in. He goes, I did my first Roth conversion, 4K in 2024. Way to go, Edgar. 4,000. He got aggressive with
You
that
did.
strategy.
Yeah. You got to dip your toe in.
Yep. Around the third quarter of the year. I just did my taxes and I included the $4,000 of taxable income per the form I received. I ended up owing $13 in penalty. I was confused, but now I understand why. They want their taxes per quarter. So when
SMH, scratching my head.
I don't know what SMH is.
He's scratching his head. Yeah,
Oh,
he's
scratching
confused.
my head. Oh, okay.
No.
SMH.
Did you have to look that up, Andy?
No, I knew that one.
What's the last time? I don't know. Have you ever used this SMH?
It's
No.
pretty common online. You know, you'll see that a lot on Facebook or something like that.
Is that right?
Yeah.
Got it. I'm SMHing right now.
We both are.
So when you overpay taxes, they kindly give you a refund, and your accountant tells you that you gave the government an interest-free loan. If you underpay taxes, you have to send them a check, and they charge you interest. SMH. Man, this guy's he's a head scratcher.
He is. Well, Edgar, that's a true statement.
Yeah.
That's welcome to the IRS. That's the way they do things. So just have to get used to it.
All right. Stephen writes in, one important thing you omitted, do the Roth conversion and reinvest in the same stocks or likely the same ETF, and you don't lose even though the market is down. It's not costing you 10% as the video indicated. Okay. Come on, guys. If you're going to do these videos and make money from them, at least be correct and cover all the bases. What the hell is he talking about?
I have no idea.
It was in a podcast episode where you guys were talking about when to pay the tax on Roth conversions. So obviously something specific in there was not addressed here. So he felt the need to.
If you want to do a Roth conversion, you buy the same ETFs. Well, you probably, maybe not. I don't know.
A lot of times you can convert in kind with the same assets.
Yeah, and then you pay the tax outside. You just convert from an IRA.
I don't know what we're talking about.
Mutual fund or ETF in kind.
But
you probably want to take on more risk in the Roth once you convert to get the compounding tax-free growth with a higher
generally that's
asset
true.
class.
Yep. It's not costing you 10%, does the video
What's
indicated.
costing you 10%?
Is that the penalty? There's never a penalty on a Roth conversion. I'm not sure what we were even talking about.
No, I don't know. Come on.
And plus, we're not making.
How much money did you make off that video thing, Al?
I'm still waiting for my first check. We do this out of the kindness of our hearts.
Oh, that's awesome. Okay.
If you see ads on any of our videos, that's YouTube, not us. As of the date this video published, no video on this channel is monetized by us or ever has been. Just FYI.
I'm 73 years old, retired, rolled over my 401k to a self-directed IRA when I retired. So in 2023, I decided to invest the funds from my IRA to buy treasury bills. This was not for personal use, and I have a 1099 from Treasury Direct. I took the funds out myself to do this. How to report this to the IRS so I don't get penalized?
I'm guessing he got a 1099 in his own name, even though it's in the IRA, self-directed IRA. So if that's the case, dang, then you report it on your tax return, but then you back it out as a nominee. In other words, it's not you. You explain that it was in your self-directed IRA. You do a negative amount by the same amount, and you end up paying zero tax. So report it, show a negative that says nominee interest was reported in the self-directed IRA, and then you pay zero tax on it. That is not only the way to handle that, but if you get some interest that really is related, like sometimes you get a joint account and you need to split it, but it all comes to you. So that's how you do it. You report the whole thing and you subtract out the part that's not really yours. So hopefully that helps.
SMH. Mr. Zipper. These guys don't know what the hell they're talking about. I'm overseas and I get
The foreign earned income exclusion.
Anyhow, I'm always looking to minimize my taxes. In any event, when you do get PP, when to determine your capital gains, you have to add back VIP. VIPP.
VEIE.
I really wish that these guys were saying were true, but it's simply not. Anyhow, keep looking for loopholes in the law, but make sure you do a FO tax return.
Well, I can say, Mr. Zipper, foreign taxation is very complicated and every country is a little bit different. So
Cover your ass.
Yeah.
Good job.
yeah.
Thanks for watching and for participating in the conversation. Leave your questions and feedback in the comments on any of our videos here on YouTube, and I'll do my best to have Joe and Big Al address them for you. They might even be helpful. Follow Your Money, Your Wealth in your favorite podcast app, and for an in-depth review of your finances, click the link in the description to schedule a free assessment with one of the professionals on Joe and Big Al's team here at Pure Financial Advisors. There's no cost and no obligation, and chances are they'll be able to uncover strategies that'll help you have a more successful retirement. I'm executive producer Andy Last with Joe Anderson CFP and Big Al Clopine CPA. We'll see you on the next episode of the Your Money, Your Wealth podcast. Pure Financial Advisors is a registered investment advisor. This show does not intend to provide personalized investment advice through this podcast and does not represent that the securities or services discussed are suitable for any investor. As rules and regulations change, podcast content may become outdated. Investors are advised not to rely on any information contained in the podcast in the process of making a full and informed investment decision.